Hey traders, Raghee here. Let's discuss what we saw today, because for those of us that have been watching today's action, it's been one heck of a roller coaster that could be summed up in about the craziest candle that we've seen in some time, which is this candle here. High on the day up in this area, low on the day down in this area. And as you can see today, the total range from high to low, let me squeeze this in here, was a whopping, right there, that candle right there, right there, was a whopping 91 points. Now, when you think about the typical range of the S&P, let me show you what the typical daily price movement range is. This is going back 6 months. The typical is about 75, right? That's the upper end of a 6-month typical price movement range or historical volatility. So that's a good bit above what we would normally expect. So this is what we normally expect in here. And again, instead, what did we get? It was a 90 some odd points. Okay, so now let's think about what moved the market here today and why I'm still very bullish on the market. So first of all, any discussion about anything other than Powell's day one of the Humphrey Hawkins testimony, his testimony to the Senate Banking Committee, anything other than that would basically dilute or ignore the main reason we're up. Starting at about 9:30, we saw the gap down, and we spent much of the early morning listening to Powell's remarks that tend to suggest that A, the Federal Reserve has not met, or, which they're comfortable doing, exceeded that 2% inflation target, that the economy is still not where they think it should be, so they do not believe it's overheated, and that there's still plenty of accommodative monetary policy to come to get us to their targets. Anything aside from that misses the point. Why are we up? We are up because of Powell, and that's exactly what we saw here. Now, the natural question is, okay, Rog, well, why were we so far down? What was the market digesting? And I'm going to show you what it was digesting. And this is something we talked about in Charts and Coffee this morning. And by the way, every morning at 9 a.m. on Simpler Trading's YouTube channel and Simpler Trading's Facebook channel from 9 to 9:20, we do the Charts and Coffee show, where, this was a big part of the conversation, where this column right here, as small as it looks, compared to this, was a growing concern that the Federal Reserve might be willing to increase the target rate, to hike rates, to begin a very slow, but begin a tightening policy as of later this year. And so the markets freaked out. This is what the problem was, that later this year we might see a rate hike. And that very small column, if it begins to shrink, will be the market basically taking that expectation back. And that's what we want to see, that the market doesn't believe that the bond market is telling us something extremely important about, and take a look, we are down very little. We have day 2 of the testimony coming up tomorrow, and I expect it to continue to contract, okay? So if Powell continues along the same lines of what we saw today, yeah, I think that this fairly precipitous drop, which I think was just a overreaction to what we're seeing in bonds and an overreaction to Fed funds futures, I think we're going to continue on to higher highs. Maybe not quite in the parabolic manner we did throughout 2020 or even through, say, mid-February, but I do expect the market to continue higher. Now, here's the main thing. Am I going to be diving necessarily into the NASDAQ? No. I think the best focus right now would be things like the Dow and the Russell, because they were, when the market got hit by the weakness, they were the most steady. Then I'll take a look at the S&P, and I'll probably steer clear of the NAS other than day trades for a little while. Now, those of you that trade ETFs alongside your futures, A, super smart to do that. B, it's going to give you a lot of opportunity in markets like the IYT, the XLI, and maybe now even XLK with the resurgence in Apple. Be careful with XLK, a lot of Apple factored in here, but one of the markets we were talking about was the SMH, which fared far better in terms of the tech world than the CLOU or the XLK, XLC, XLY. And then we could also consider XLF and XLE, which have definitely been relative outperformers, arguably benefiting from a little bit of sector rotation. Okay, so this is what we're seeing. This is why we're seeing it. And yes, I'm looking for more of the continued message from Powell that we've seen today. The markets may not scream higher, but I think that initial fear, courtesy the bond market and courtesy Fed Fund futures, seems to be for now waning. All right, and that should let equity markets rally. Now, in the premium video, I'm going to dive into why copper and crude never flinched. They've been telling us, yes, we're seeing a lot of volatility. Maybe focus more on sectors in the Dow that are related to the Dow, sectors that are related to the Dow and the Dow itself, because of the implications crude and copper have on those particular stocks. But when you have some time, check out the brand new issue of the Countdown Trader, where I talk about these two canaries in a coal mine and why they never, ever flinched and have continued to indicate that this reflation environment is alive and well, and it's not time to start picking tops and expecting more downside. I'll see you in the next update.